Hey traders, this is Ron Haydat, Market Tamer. Happy Hump Day. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll start off here with the SPY finishing up a whopping 17 cents. Now we did come way off the lows, but really nothing has changed since yesterday. It's almost a non-event. We had sort of sticking the foot in the water to see how low we were going to go today, and then we came back up to basically break even. These are the December lows. Over here are the May lows, and here we sit right now. Go ahead and zoom in. We basically tested almost the entire range from that big move down on Monday. So we're just digesting, catching our breath. Notice, if I zoom in even further, we close back inside the 2 standard deviation Bollinger Bands. If there was any doubt yesterday that the oversold condition was almost gone, today this counts as being completely gone. As of right now, this is a flag, hold. This is the flag. This is still bearish. My commentary from yesterday stands, so I'm not going to rehash it with you and waste your time, but we can go either way here. The current direction is down because we're below the 2 main moving averages to the north, the 20-day and the 50-day. The purple, which is the institutional moving average, the big one, that remains the target on the SPY. If we take a look at the Dow via the diamonds, the Dow finished down 5 whole cents. Notice it pretty much got close and tagged the 200-day institutional moving average. Again, finished near the highs of the day. 5 cents down is essentially unchanged. Same commentary here. We are back inside the lower Bollinger Band. Oversold condition is completely gone. We can easily, if we come up here to the 50-day, that would be the upside target. We break the 200-day. That is bad news for the bulls. Take a look at the Qs. They were up. They did the best today. They were up over 0.5%. They bullish engulfed the previous day. That's a plus. And they closed higher than where we opened on Monday Massacre. At this stage, the 50-day moving average, which ties in with Friday's close, that little bit of confluence around 186, 187, that is the target. That's $3 higher, 1.5% or so. If the Qs get up there, they can't get above it, they then close lower. That's a bad sign. As of right now, between SPY, diamonds, and the NASDAQ here with the Qs look the best. They're into the gap a little bit. Now, I'm not saying that's super uber bullish. All I'm saying is technically there's a little bit of a bullish move maybe to here on the daily chart. That's it. This is not trend changing by any stretch. This also still is a bear flag in the making. Russell 2000. They were down 4 whole cents. If I go ahead and zoom in here, same thing, they're just tracing out the previous day. This also could be considered, today's move could be considered an inside day compared to that move on Monday. This also is still bearish. Yes, we're getting some tails down here. There's some buying off the lows, but we're not making any progress. If, let's say, Thursday or Friday, we have a big move higher, then the bulls can start feeling a little better about themselves. But even if that happens, they still got to get above their major moving averages. So we'll keep an eye on this each night. Now, it's a couple of different stocks to look at here real quick, and then we'll do gold and silver. Here is CVS. Up 7% today. Amazing what happens when the market's not collapsing and you have a good earnings report. Big volume, 22.8 million shares, sounds like a lot. And if you look over here, it is pretty good, in fact. Now, if I zoom in, we just have a new closing high. The target now would be up here to where the gap down occurred around 62.50. Then the gap fill up to around 68, 69. The only thing that's in its way, the 200-day moving average, which interestingly enough, if I zoom out, stopped it cold the day before earnings and then stopped it cold back here too, and then acted as support. Well, if we start using past performance, while it's no guarantee of future performance, it never is, it gives us a good idea what may potentially happen around that time. So the 200-day is actually the big target here now. If we get through that, which is 60.55 right now, then 62.50-ish, and then back up towards 67.8, 68. The 20-day EMA would be a potential end-of-day trailing stop, but with the market not holding up real well right now, this one might find it hard to keep moving higher too, but could be potentially a nice little bullish trade idea to keep an eye on. How about Weight Watchers? Kaboom! 42% gain earnings. Pop goes the weasel. This has been such a huge move down. We totally blew out this previous high around 25, 26. If I zoom in, we've even filled the gap right on the nose from late February, and we're right at the 200-day moving average. if it closes above the 200-day moving average. It's like when we talked about this one back here in July. The next target, somewhere up in the mid to upper 40s, up towards 50, that could be huge. So we'll keep an eye on this one as well. Now, talk about seasonality, right? Now, 80% of the stocks, you back that symbol out there, no cheating. When we talk about stocks, stock market, 80% of the stocks are going to follow the market. So if the S&P is going lower, in theory, 8 out of 10 stocks are going lower. Goes up, 8 out of 10 stocks go up. Well, how about Disney? DIS, the Mouse House. Typically, the August report is not a good one in terms of the reaction. I'm not saying it's a bad report. The reaction is typically not good. The big money typically flows out of Disney during the summer and then comes back in the November timeframe. Despite the market actually coming off the lows doing pretty well, this little bugger still dropped nearly 5%. We finished around 134, 135. There's a little bit of support here at 130, and then comes the 200-day. This is what you got to be careful about. Market didn't get killed today, but this stock did. Why? The seasonality says, historically, the money pulls out of Disney over the summer. Now, we'll see how much further this is going to drop. Again, watch 130, watch the gap at 127.50, then we go 200-day in purple, and then we come down to the gap fill. Just heads up, this should not have been a surprise if you follow the videos or the seasonality webinars that I do at Financial, because everybody and their mother would have known that be careful right now on DIS. And by the way, even though it came off its lows, the current trend is down. I would still want those protective puts on the stock as an example. So if you're paper trading this, those long puts would stay in place until we get some other type of a bottom in place. And like I said, I'll keep an eye on it. And last but not least on stocks, that is Vodafone. Here's another one we talked about. Remember how we talked about when it gapped up? This was a huge deal back on 726. If I zoom in, look what happened. Here was the gap up when we talked about it. Look how the volume began to pull back. Even with the market getting killed, this stock will not close below the 200-day moving average. What happens today? Market actually holds itself together. We even get a little bit of a bullish engulfing pattern, and the stock finishes at the highs of the day. If I was trading Vodafone right here, I really like the 200-day moving average as a trailing stop, because it's sort of playing hot potato. It jumps above it here, touches it here, and just won't close below it. They can't break it. So if it does break the 200-day, that'd be bad news. So it's holding up there quite well. Upside targets, just like we would have talked about in previous videos. There's some consolidation here, but I would say the big target is up there near 21. All right, gold, silver, miners really quick. Just heads up on gold. I can't believe all the news articles out there as if the world is going to end. Hey, maybe this time it does. Then we have nothing to worry about. I'd head to Red Robin and get as many all-you-can-eat fries as you can. That's what I plan on doing tonight. But in all seriousness, gold's been going up. Typically doesn't do that well in the summer. Today we have a reversal candle. We opened up here. We traded all the way up to 142.50, and then we closed at the lows, almost the lows of the session. So what I'll do is I'll keep an eye on this to see if this becomes like a reversal in the sense of like a island reversal or a shooting star type situation. But basically, this is like a hammer turned upside down for simplicity. This is a bad omen. However, just because it's looking like that today, there's an update tomorrow. It's pretty much completely invalidated. So we don't trade candlesticks off just one candle, but you're being given a warning, and you're outside the upper Bollinger Band too, showing an overbought condition. Above is overbought, below the lower band is oversold. We take a look at silver, SLV, did better, 3.8% higher, did come off the highs of the day, but I'm not trusting what silver is showing per se. I mean, this is a lot more bullish than gold was in terms of the way it finished the day, because silver's been lagging so much. But silver breaks out today. How about the silver miners? They could not break out. Again, that's a divergence. That's not a good sign. How about the gold miners? GDX. They came off their highs as well. Again, one day doesn't make a trend, but just be careful here. There's a lot of negative news out there today. And gold and silver didn't finish at their highs. They finished at their lows except for the SLV ETF. All right, now that is really it. Turned out to be a longer video than I thought. I hope you find this helpful. Just please keep in mind, the bears have the technical edge on the major indexes. Despite the market trying to hang on here the best it can, downside targets remain the 200-day SMA. Wish you all the best, and I'll see you in the next video. Take good care.